cuts and make promises that people will wait around and say, okay, I'll wait. And so that could be a problem. In fact, it was a big problem for Reagan. He phased in his tax cuts over 3 years. So guess what? We had a recession until about 6 months before, a bear market until about 6 months before the last tax rate cut took place. So I think it's very important that they get things done fast so people don't wait around saying, I'm going to wait for a better deal in the future. And then I think he can do a lot. He's not going to have to deal with a recession. Mm-hmm. So I'm excited. I think we'll get, I'm sorry, keep going, don't I?
No, it's all good. Yeah. And so then, right. So if we've been through the rolling recession, as that was going on, the indexes were screaming, right? Largely driven by Mag 7. So now, perhaps less fear of the consumer being weak or.
And the Mag 6 move was all about cash and safety. And oh, by the way, yes, they'll benefit perhaps from AI. And I know there are debates on that, sustained innovation, disruptive innovation. Nick and Brett and you have had this debate on the brainstorm. But I really do believe that the Mag 6, to the extent they are going to benefit from AI and all of the new technologies that we think are going to be turbocharged during these next 5 years. There are going to be smaller businesses that are going to benefit much more from an appreciation potential point of view. They've been so beaten down, right? And I think chief among them is healthcare and how the dynamic is going to shift from big pharma, which also had way outperformed the smaller names. I think big pharma is going to find the DeFi, decentralized finance, or I'm hearing it called the Finternet. I learned that from an Indian person in India. They're calling it the Finternet, which, think about it, that actually rings true. This is, the layer of the internet that no one built in, the developers did not build in, because we didn't know about financial services and commerce in the early 80s being a thing online. It just didn't occur to anyone. And then the third revolution is Web3, or, the digital property rights revolution. And that's going to be huge. And so I think this administration is going to be very friendly. After all, Trump loves the idea, and Melania as well, of these crypto assets, or Web3 assets with his face on them. And so I think it's going to be fun. I think President Trump will want to move us a little bit more towards that way of thinking about the world. And, Art Laffer, I know, speaks to President Trump, has spoken to most presidents since, I think, President Nixon, actually, and consulted. He was not employed. He was employed by President Nixon and then decided he would never be employed by the government again, but wanted to give his advice. His advice is to, flatten out the tax rate and reduce it. And if the trade-off is tariffs, as long as they're not, I think we have to treat our free trading partners maybe a little differently than those who are not allowing a level playing field. But I like this trade-off. You also asked, and I know I just went on a tangent there, Nick. So that's the tax side of things, but you were coming from the dollar, because he's looking at Apple, which was one of his biggest holdings, and he was looking at its valuation relative to history, and it's so far above anything we ever saw, even after the smartphone was launched, and Apple just took over what was rightly Motorola's, Ericsson's, Nokia's, even BlackBerry's bread and butter. Its multiple is much higher than it was back then. And he's probably saying, okay, wait a minute, their revenue growth has been slowing down. There's no new smartphone moment here. And maybe he doesn't believe that AI is going to make that much of a difference. So I would say he's looking at concentration in the market, saying this is a harbinger of a bear market. If you look at his asset class, but I think that the surprise here is going to be that these smaller companies are now going to be given some running room, and this is the broadening of the market. And I think we're going to see, incredible creativity, entrepreneurial spirit, animal spirits coming back. And those stocks have been neglected. Really, they've been neglected if you look at our strategies for certainly the last 4 years. In total, of course, we've seen light at the end of the tunnel from our AI and next generation internet strategies. But the earliest stage, the multi-omics, genomic revolution strategies have been quite disadvantaged. And I think they have a lot of catching up to do.
Amazing.
Cathie, Sam, we don't get Cathie on every week, so I'm going to ask one last question, which
from real rates. Some has come from inflation. Now, one of the mistakes I think people make is something called the Phillips curve. They assume that when employment is strong or the unemployment rate goes down, that inflation goes up. And if you look at the 80s and 90s, and I think we're going into that kind of environment again, you'll see that as real growth accelerated, inflation came down. Why? Productivity. You get good unit growth, you get the productivity coming down. Now, the reason people don't think we'll see a repeat of the 80s and 90s is we started at a 15% inflation back then. And here we're at 2.5% inflation, roughly, depending on the measure. And they're saying, well, what does that mean? Productivity and inflation coming down. I think some pricing, say 2% real and 3% inflation. Can you imagine if we're right, an economy where maybe we're growing 4% real and inflation is 1%? It's still the same nominal, but we think that could happen. And part of that could happen because because technology's permeating every sector, blurring the lines between and among sectors, this deflationary influence. AI training costs dropping 75% a year. AI inference costs dropping 85-90% per year. That's going to permeate every sector.